Investors, the news is in after the latest FOMC meeting. The Federal Reserve just hiked interest rates by another 25 basis points. And you're not only going to want to understand how this will impact you, but what you need to be doing right now. If you're brand new here, I'm Ari, a value and dividend investor on YouTube, with a mission to help all investors with both economic insights and stock ideas to drive better investment returns. As for today, I want to update you on my personal account, talk about all the need-to-know macros for all investors, and then fly right through 5 monthly paying dividend stock opportunities that you shouldn't be passing up given the state of the market. With that said, I only ask for your support in return by simply tapping on that thumbs up button should this video bring any value to you whatsoever as an investor. And if by the end you enjoyed the video and want more content just like this, make sure to subscribe and join me on this journey as well. Now with that said, let's dive right in. So over the last couple of weeks, my account was on the up and up, to which the momentum began to really build when the Federal Reserve went off the grid during their blackout period. However, I continue to warn investors that this should not be a surprise if we suddenly lost all the momentum, and sure enough, I was right. Whereas my account plummeted by nearly 3% from my last video. It's now sitting at $110,646.90. And that's not as important as to the what and the why to all of this volatility, because in understanding the bigger picture, you can feel more confident in simply staying the course, if not doubling down on investments that will ultimately perform well and allow you to profit when all is said and done. So let's rewind back a couple of weeks and kick off with the earnings season, which to everyone's surprise, businesses were reporting stronger than expected earnings, showing resiliency and just overall strength. Now, the Federal Reserve then disappeared into their blackout period, meaning all the negative, fear-mongering news headlines simply vanished, leaving investors with a skewed sense of reality. Now, this all created the phenomenon of what I call emotional investing, meaning no one's really investing on reality of our economic situation, which is dangerous because when reality hits us, many investors lose more often than not. And as we just saw, the Federal Reserve raise interest rates by another 25 basis points on May 3rd. That was expected if you've been following this channel. Now, in the post-announcement briefing, Powell said that there will be a pause in interest rate hikes going forward and that any additional rate hikes will be data-driven. But Powell also mentioned that if there's more room to cut rates in the future, he will, but for right now, this just seems highly unlikely. So the big question is, how will businesses be impacted in an environment where inflation is pressurizing businesses from one side and high interest rates are doing the exact same thing from the other side? Now, this leads me to looking into the future and just calling a spade a spade. I'm not here to sugarcoat my thoughts because I want you to subscribe, though certainly if you are finding these videos to be of value, consider joining me. No, in all seriousness, I'm saying this because a light to mild recession should be expected and you need to be prepared. Now, how do we do that? Investing into high quality businesses and ones that deliver through on promising income, which leads me all to our very first monthly paying dividend stock, which is none other than the Dividend Stock, whose claim to fame is in their slogan as the monthly dividend company. We're talking about Realty Income, ticker symbol O, which has been a consistent top performer within my portfolio for years now and only continues to generate passive income for me. Now, Realty Income is a real estate investment trust that is actually the largest single tenant net lease solutions REIT within the industry. And in knowing just that, your confidence should immediately be secured, because net lease REITs have one heck of a business model. Essentially, all the properties they lease out are no longer financially their responsibility, meaning all the expenses fall on their clients. But here's what you really need to know. Realty Income's clients are some of the most prominent across the industry verticals, ranging from Walmart to Home Depot, CVS, Kroger, and 7-Eleven, just to name a handful of them, which allow for Realty Income to hold to a strong 99% occupancy rating. Now, all in, Realty Income has over 12,000 properties that span across the United States, and more recently, they've been growing internationally with properties in the United Kingdom and Spain, which has allowed their market capitalization to amass over $40 billion. Now, as of this video, Realty Income is actually trading off its peak from earlier this year for a share price of $60.97 per share, and there could be more potential for their share price to slide in that $50 range, which would be ideal for longer term investors. but that's still a win in the eyes of the analysts who only foresee growth with its share price rising to $68.60 per share. That's over 12% worth of upside. Now, with excitement brewing amongst retail investors as well, as we can see, more investors are adding Realty Income to their portfolios, and even smart money is making those money moves and loading up on more shares worth of Realty Income, this dominant real estate player. However, as we're all here for that dividend, we can enjoy the history of 634 consecutive months worth of dividends declared, with the dividend yield hovering around 4.8%. Next up, let's dive into LTC Properties, ticker symbol LTC, which is another real estate investment trust, but has a focus on investing into senior citizen, housing, and healthcare centers, whether it's through sale leasebacks, mortgage financing, or joint ventures, or even construction financing. Now, let me first say, as the life clock ticks for all of us, the aging process is inevitable, meaning that this business model in catering to senior living not only remains reliable, but booms. And since 1992, LTC Properties has been proving itself a respectable investment, amassing a portfolio consisting of 135 assisted living communities and 76 nursing homes, totaling 218 properties across the United States. Now, we can see as of this video, LTC Properties is actually trading down on the year right now for only $33.23 per share. Investors, this is a $1.3 billion market capitalized behemoth that we have on our hands. And keeping our economic backdrop in mind might not be too bad of an idea for a safety play. After all, even analysts foresee a fruitful future with over 9% worth of upside on the way, with the share price coming up to $36.50 per share. And until then, LTC Properties will likely continue to shell out their dividend, coming in at a whopping 7.06% worth of a dividend yield. Moving to our third monthly paying dividend stock, we have Stag Industrial, ticker symbol SCHD, which is yet another real estate investment trust, but Stag's focus is strictly on the acquisition and operation of industrial properties throughout the United States, and they place a major emphasis on warehouses, which is key to note because that leads us to talking about the future trends when it comes to e-commerce, with clients like Amazon and FedEx, as well as some of the largest logistic companies in the United States. Now, currently, Stag Industrial has a presence in 41 states with 561 total properties within their portfolio. And over the last few years, their share price really hasn't fared well, but that's a given after years of strife when it comes to e-commerce companies and businesses in general that just aren't scaling up their inventories given the economic climate. But that presents opportunities along the way, as Stag's share price still hovers around $35 per share, but this is a growing $6.4 billion market capitalized real estate gem is likely to bounce back upon an economic recovery, which is why we see analysts favoring this opportunity, forecasting nearly 18% worth of upside, with the share price rising to $41 per share. And some of these hedge funds are also loading up on shares like Ken Fisher's firm or Gotham Asset Management. And nonetheless, it's Stag's dividend that should excite all of us as dividend investors, as a monthly paying dividend stock opportunity paying a 4.23% dividend yield. Now, as for the next two mentions, I wanted to go in an insanely safe direction, yet still with those monthly dividend checks flowing in our way. So both of these next two mentions are ETFs, or exchange traded funds, meaning buying just one share is going to result in an investment into a basket of stocks as opposed to just one. And I wanted to start with the Global X Super Dividend ETF, ticker symbol SDIV, which has about $790 million in assets under management by way of investing into 100 of the highest yielding stocks globally, with only about 30% of these holdings being in the US. But I must share with you that SDIV could at times be rather volatile just based on the equities within it, yet on the other hand, the ETF deserves some credit for its long-standing track record when it comes to a dividend, as it has been paying these dividends out every month for the last 11 years. And at this time, SDIV could be yours for roughly $21 a pop, with an expense ratio coming in under 1% at just 0.58%. And when it comes to a dividend, you would be collecting on a powerful dividend yield that is hovering around 14.86%. Now, last but not least, the JP Morgan Equity Premium Income ETF, ticker symbol JEPI, which I'm sure many of you are familiar with. Nonetheless, if you're not, JEPI is another exchange traded fund with a goal of mitigating volatility and limiting downside while generating income through a combination of selling options and also investing into US large cap stocks. Now, speaking of which, JEPI currently has 115 holdings within it, with the Hershey Company, Pepsi, AbbVie, and Microsoft being some of the larger holdings within it. But it's also important to note that Many of JEPI's holdings are US-based dividend payers from relatively defensive sectors like the consumer staples sector, so plenty of reliability with this fund. And right now, JEPI can be yours for only $54.16 per share, and with that expense ratio coming in at just 0.35%, that's not too shabby. And as for analysts, plenty of them foresee a promising return for shareholders with over 13% worth of upside upon an economic recovery, with that share price climbing to $61.25 per share, which is plenty of investors eager to load up on JEPI. As you can see on tip ranks, many of investors are doing just that, especially to collect on JEPI's dividend, which has been reliably coming in at an 11.41% dividend yield. And there you have it, investors. From Realty Income to LTC Properties, Stag Industrial, as well as SDIV and JEPI are 2 monthly paying dividend ETFs. These are the 5 monthly paying dividend stock opportunities that we all should seriously be considering, as inflation is likely to remain sky high for a prolonged period of time on top of higher interest rates. Now, if you have any of these dividend stocks or ETFs in your portfolio, or you're thinking about investing into them, I'd love to know your thoughts on them, so comment down below. And before you take off, if today's video was of any value to you whatsoever, let me know by tapping on that thumbs up button. And I want to make more content very similar to this video, so if you appreciated that and want to be on this journey with me, go ahead and subscribe to the channel as well for more stock ideas and, of course, economic insights. Now, investors, until the next video, I will see you all there.